Yo, what up, y'all? It's your boy Rob coming back at you once again with another live stream. So before we get started, you already know what to do. If you're not subscribed to the channel, make sure you hit the bell icon twice. Smash the like button, share this video out to all of your followers, and let's get it cracking, all right? So shouts out to everybody that comes in the room. You guys already know what to do. Make sure you please smash that like button. Also, make sure that you share the video out. If you guys know anybody who is interested in cryptocurrency or anything like that, blockchain technology, Web3, make sure that you shoot them a link with the live stream so that they can come in and chop it up with us. All right. So what we're going to be talking about today are a couple things. We're going to be talking about some price predictions, and we're going to be talking about the merger. All right. The merger from Ethereum's two blockchains, proof of work and proof of stake. And something that I've been talking about for a long time that I always thought was going to happen, but they're actually talking about it now, is the flip of the prices. Because what people are expecting to happen is people are expecting Ethereum post-merge to possibly surpass the Bitcoin price, which is huge because that would change the dynamic of the cryptocurrency marketscape dramatically. It would take some of the dependence of all of the cryptocurrency prices away from Bitcoin. All right. Shout out to my man AB Promotions. My man AB Promotions said, I hit the like button yesterday when you were supposed to do the stream. What's up with it, bro? Good to see you. You see your boy is Bitcoined out. I got the Bitcoin Gucci print. You know what I'm saying? Ethereum's price is looking Gucci. We in here. All right. So here we go right here. Bitcoin is above 22,000 ahead of Ethereum Merge. Will the flipping eventually happen? You know what I'm saying? This is it right here. Will the flipping eventually happen? So let's see. I think it will at some point. It may not happen now. It may not even happen within, the next 2 or 3 years. But I do believe that at some point this will be a thing. And the reason why I feel that way is because Ethereum just has so many more uses and is so much more practical. And in my opinion, once this merge happens, the blockchain will actually be so much more efficient. There's not going to really be a justification for Ethereum to not be the number one. You know what I'm saying? So now here it says, Consen Systems head economist Lex Sokolin joins first mover to discuss impact of Ethereum Merge on Ethereum price and the significance of reducing energy consumption for future Web3 developments, plus his thought on whether Ethereum will eventually flip Bitcoin. All right. So now that's the question right there. Is that what's going to happen? So let's check this out. We got 15 seconds worth of an ad here to watch, and then we will check this video out. All right. So while we're checking this video out, make sure that you guys smash that like button. Got my man AJ over there on Twitch. What's good with it, bro? Good to see you as always. So here we go. We're going to check this out real quick. Let's see what we got.
To find the next crypto gem.
And joining us now to discuss the crypto markets ahead of both the merge and August CPI data is Lex Sokolin. He's head economist at Ethereum Development Hub Consensus. Good morning, Lex.
Good morning. Great to be with you.
Great being with you as well. And so we have the merge, and I think we at the very beginning of this broadcast, I mentioned that we're seeing volatility in the price of Ethereum right now, in Ether right now. Let's say compared to Bitcoin, in part of it is the moving. It's moving with the price of Bitcoin, but it's also got this own unique feature. The merge coming up this week, in the next few days, rather. We can't say definitively, of course, you can't actually say the exact moment it'll happen. Nonetheless, we expect it happening. So a couple of things. Is it really affecting the price of ETH right now compared to other cryptocurrencies? And Well, why don't we start with that? What do you think? Do you think that it has its own unique aspect to it that's moving the price differently from the rest of the market?
Yeah, I think dangerous questions, but of course, prices reflect the information that's flowing out into the market, and Ethereum has different dynamics from other cryptocurrencies. It has the supply side dynamics around the merge. So, proof of stake Ethereum looks different in terms of its economics than proof of work Ethereum, and there's going to be advantages in terms of the supply side. And then on the demand side, like the things that make Ethereum work and that are interesting and the developments in Web3, those are also something that's, I think, bespoke to that asset. That said, everything is related to the macro environment. So, we're all subject still to the Fed, the inflation numbers, and all of that.
I want to touch on that CPI data in a little bit, but of course, does the merge affect what you do at Consensus? What Consensus will do going forward? Does anything change for Consensus?
So for Consensus, we focus on two sides of let's say the platform or the network. And the first side is users with MetaMask and making sure that people can actually touch and use Web3 products and applications. And then on the other side with products like Infura, it's making sure that developers, and I think something like 500,000 developers, can build on Web3 and on Ethereum. And so from our perspective, these are our consistent goals. I think it's really important that after proof of stake.
So now here's my question for you guys. How many of you guys have been staking Ethereum? Remember, I told you guys, if you get Coinbase, you can stake Ethereum to E2. And right now, the APY of staking reward, I believe, is 5.25%. If you guys are doing that, give me a thumbs up in the comment section. If you're not, give me a thumbs down. If you're not, you can do it. There are links that the bot puts in the chat that give my referral code to Coinbase. And if you use those referral codes, you can get $10 of free Bitcoin. All right. So if you guys are doing that, let me know. And if you're not, you can do it if you're interested in it by just clicking the links that the bots put into the chat. Okay. But now also on Coinbase, there's another coin that's called Algo. And if I'm not mistaken, that coin has a staking reward of 5.25%, which is also a pretty good staking reward. So you may want to check that out as well. All right. Again, you can get that on Coinbase. And then there's also a link that the bots will put in the chat for crypto.com, which has more cryptocurrency available on it, as well as NFTs. And the link for that is in the chat as well. Now, there's a thing called Coinbase Wallet, and you can get that. That's easy to attach to Coinbase. All right. There's a way you can do it through Coinbase, and there's also a link. I haven't put a bot link in there for that yet, but I can. You know what I'm saying? So check that out.
People can continue to use Ethereum and understand how gas works, understand what it means to burn the fee and the types of savings that creates for people, understand how the network is validated, and the fact that people are going to have the opportunity to stake. Many, many more people are going to have the opportunity to stake. And I think that's on the user side. Now, on the developer side, we turn on access, we enable access to a whole bunch of EVM compatible chains. And of course, making sure that we support Ethereum once it's on the proof of stake side is really important. And then we do a ton of work. I mean, just a ton of work working on the protocol. So we have a large team that contributes code to the network. And of course, we've been doing that now for years and years.
So Lex, all of this sounds incredibly bullish for Ethereum. And on top of that, Bank of America is saying that the Ethereum blockchain's upgrade will lead to greater institutional adoption of ETH. And yet today we're seeing ETH in reverse compared to the rest of the crypto markets. Why is that?
So real quick, I was actually watching a video from a content creator on YouTube that I've been subscribed to for a real long time called The Crypto Investor, or I'm sorry, The Modern Investor. That channel is called The Modern Investor, and The Modern Investor was talking about how the merge is such a big event that's going to happen that Google has actually implemented a merge timer. All right. Did you guys know that? Now, the merge is supposed to take place in 3 days. All right. And they're expecting 3 major price point increases. The first price point increase is from where it is now, which is about, let's say, 2,000 to 5,000, and then from there the next level that they think is going to go to is 10,000 per Ethereum. Now here's my thing: if you have Ethereum and you're staking it, you'll be generating partial Ethereum rewards. Also, as a result of this merger, there's allegedly supposed to be a hard fork that's going to occur, that's going to generate a offshoot Ethereum token that should allegedly start out at about $18 per token, but it'll probably skyrocket. Also, there's the issue of Ethereum Classic. Now, I've heard that Ethereum Classic is really expected to skyrocket once the merge happens. We won't know, of course, until we see how the merge is working, if there's not any issues on that new blockchain. But if everything goes smoothly and things go as expected, Ethereum Classic is supposed to skyrocket. So if I was everybody, I'd make sure that you have a nice, decent amount of Ethereum, kind of just be building onto that and just kind of let it sit, because one thing that you want to be doing is you want to be staking. You know what I'm saying? And you really want to be staking Ethereum. You know what I'm saying?
Wiggly lines are always very emotional, and I think they're catalysts that move the price up, and of course people try to anticipate those catalysts and often trade against them in the short term and so on. There's some dynamics around trying to borrow ETH ahead of the merge and the potential other forks, but I think if you are looking at Web3, you just have to take the long view, and from my perspective, the ESG narrative is extremely positive. So moving into a world where Web3 takes up 99.9% less energy is going to be a huge improvement, at least in the sense of a barrier goes away for artists, for game developers, for anybody who wants to build large infrastructure in the space. So I think despite the short-term changes in the price, the long-term outlook, I think from a secular perspective is very positive.
So, Lex, I mentioned CPI earlier, and as Christine knows, I'm loath to ascribe any of the general price movement in crypto to worries about inflation, because as we've seen, since inflation has risen, the price of, let's say, Bitcoin has gone from 68,000 to 20-something thousand. So I think that whole theory kind of isn't really real. Nonetheless, there's still this group of people who think that, yeah, it affects the price of Bitcoin. So we have CPI data coming out. What happens if what happens if the CPI data is worse than expected? That is, if we show higher than expected inflation. And what happens if it's lower than expected? What do you think is going to happen? What's the reaction going to be in the crypto markets?
Yeah, I think this is the really hard game of thinking about expectations of what everyone else is expecting, and then imagining what happens if
My man AB Promotion says, should I buy Ethereum through my Coinbase wallet? You can buy Ethereum through Coinbase. You could buy Ethereum through Coinbase wallet. You can buy Ethereum through crypto.com. There's a lot of different ways that you can buy Ethereum. I always buy it through Coinbase. So that's how I buy it. I'm going to be buying some on Ethereum or on Coinbase wallet soon, because there's some DApp Web3 and other tokens that I want to get. But I don't know if you can stake the Ethereum on the Coinbase wallet to E3 or to E2. Now, I know you can do it on Coinbase. So I would do it on Coinbase. It's an easy way to stake it on Coinbase. So that's why I've been buying it on Coinbase. but I'm sure there's other ways to do it, and there could be other ways that are easier or more efficient. I'm just telling you about the way that I go. You know what I'm saying? But my way ain't the Carlton way. What up with it, bro? Good to see you as always. And if you guys haven't smashed that like button, please make sure that you guys smash that like button. Also, if you're not subscribed to the channel, make sure that you hit the bell. All right. The merge is only 3 days away. If I'm not mistaken, it's supposed to take place on the 15th of September. All right. So again, you want to make sure that you are staking. Stake some of that Ethereum and get some Ethereum Classic too. You know what I'm saying?
If reality is different from expectations and then trying to position to that, I think it's really difficult. When I think about inflation, the take isn't necessarily that, Bitcoin or ETH are inflation hedges. And if you look at the quantitative data, they have not been, at least over the last year. But if you think about, who uses crypto, end of the day, it's people, and people have consumer expenditure. They have a budget for, consumption and for risk-on assets and experimenting with new technologies and doing new interesting things. And so when you start pushing people's ability to spend down and down and down, that's when you start, I think, seeing contractions in the risk-on assets because people use them as a piggy bank. They cash them out. And so I think the story about the macroeconomic environment is if it allows consumers to have a larger budget, and certainly the COVID environment was that. If people have a larger budget, they're more likely to take risks. They're more likely to use Web3 and try new protocols. And then if they're compressed and they're much more worried about paying down, their mortgages or their rents, they're going to have less discretionary budget, and so that's going to be damaging for crypto prices in the short term.
Lex, do you think that there will ever be a flippening between Ethereum and Bitcoin, that is an event where Ethereum will become more valuable than Bitcoin? Or is it that because Ethereum's use case is to be used versus Bitcoin, which the narrative is to be a store of value and to, be a hedge against inflation? Do you think because of that Ethereum will always stay relatively low in price compared to Bitcoin?
No, that's the question, guys. This right here is what everybody is curious about. All right. So pay very close attention to this. All right, because this should be some information that helps with your decision about Ethereum versus Bitcoin. Okay. Because this has been talked about for a long time. A lot of people have always felt that Ethereum is severely undervalued, and I think that it is as well in comparison to crypto. And remember, the market always corrects itself. That's a saying because the market does always correct itself. More evidence that the world is correct, but the Ethereum price will at some point eventually correct itself. And in my opinion, because that correction is going to reflect how much more valuable and how much more applicable Ethereum is than Bitcoin, it will ultimately surpass Bitcoin and will ultimately be the leader of market cap in cryptocurrency. That is my thought process on that. So let's check this out and see what they say here.
In which the narrative is to be a store of value and to, be a hedge against inflation. Do you think because of that Ethereum will always stay relatively low in price compared to Bitcoin?
I think reasonable people can take very different positions on this issue, and those positions can all be, justified. The way that I would see it is that in the Ethereum network going forward, the ability of a regular user, and certainly of any institutional user, to stake in the network and get something like anywhere between a 3% to a 10% interest rate, first off, that will set a kind of a benchmark rate for the DeFi sector and for the crypto sector as a whole. And so we think that a fairly large portion of people are going to be staking their ETH in the protocol to secure the protocol, which in a sense is going to inevitably turn at least some of the ETH into a store of value inside of the network. And you can look also at DeFi and see Ethereum used as collateral as well. And the recent news around MakerDAO and other protocols that are looking for decentralized collateral, those are certainly supportive of ETH as a store of value, ultrasound money type asset. I think on top of that, ETH is also used to power the protocol and often as a unit of account for all sorts of goods and NFTs inside of Web3. And so I think it has both of those functions, the sound money function as well as the store of value function. And I think the thing I would be excited in regards to Bitcoin would be to see more Bitcoin incorporated into Web3, likely through bridging or wrapping or other ways, because I think it is a fantastic decentralized money. And if it could be used as collateral inside of Web3, that would be even more powerful.
So as you guys can see, he's not answering the question. He hasn't given a definitive answer. Basically, what he said is that a reasonable person can take either position, but as you can see here, he hasn't given a definitive answer of whether he thinks that Ethereum will eventually flip and be the bigger of the two.
If that continued to increase.
Do you think ETH will flip Bitcoin?
Do I think ETH will flip Bitcoin? It's a question like, will the economy be bigger than all the money in the world? If I were to put my neck on the line, I think the growth rate of ETH is going to be higher in the short term because there's a lot of stuff going on. But the broader question is a mystery for the gods.
So he never ends up answering the question. You know what I'm saying? He's dodging the question like Biden. Big facts. AB Promotion says, Rob, what tokens are you looking at on the wallet? Really, honestly, I'm looking at that. There's this coin called Tierra. And I actually was looking for a video about it, but they're doing a massive coin burn of Tierra because they're trying to get the Tierra price to target at $1. All right. So I think that on the Coinbase wallet, you're able to get Tierra. Now they've been burning coins on that the same way they've been burning the Shiba coins. That's the reason why the Shiba price has been going up. It's not because it's anything special. You know what I'm saying? It's because they've been doing a coin burn, a massive coin burn, because they want to get the Shiba price to a penny and they want to get that Terra price to $1. The gains are potentially higher if they can successfully get this Terra coin to $1. You know what I'm saying? That's where you will see those significant gains at, because right now Terra is under a penny. So depending on if they're able to do that's something that I've been looking into. You know what I'm saying? So now here's an article from Blockworks about the flipning. Will Ethereum flip Bitcoin in the next year? So they put a time frame on there. They say within the next year. I don't know if that'll happen that soon. That's pretty aggressive right there. Next year, I don't know, but it could happen. You know what I'm saying? That's not saying that it's out of the realms of possibility. I just don't think that it'll happen, because that's a tall expectation. But I've seen crazier things though. I've seen Bitcoin go from $4,000 to $60,000. So it's not like the numbers are impossible. Crypto is very interesting with how fast prices can increase or how fast prices can decrease, which never forget that the prices can decrease just as fast as they increase. That same token that I'm talking about, Tierra, I was talking to my brother about it, and he was telling me about how at one point it was over $1, and I'm sure it was over $1 during that time when Bitcoin was at 60K, and now it's back below a penny. So just, be on the lookout, be aware, make sure that you're doing your research, make sure you're watching channels like Tales from the Cryptocurrency and other cryptocurrency channels, or reading articles from things like CoinDesk or reading articles from places like bitcoin.com, just to make sure that you have your information straight, because that's important. Always do as much research as you can. Information is key. You know what I'm saying? So now here it says Bitcoin has forever remained the top crypto, but Ethereum's merge could mark the beginning of a major divergence. Now, see, this is why this is important. I've been telling people about Ethereum not only since the beginning of this year, but for a long time, ever since I've been, checking out cryptocurrency and buying crypto. The potential for Bitcoin to flip Ethereum has rarely looked stronger, though some analysts argue that it isn't enough. Ethereum's merge is expected to spur additional outside investment due to a 99% decline in energy consumption. So the 99% decline in energy consumption, that goes into what we talk about on Blacklight Revelations 4. One of the things that's going to make things more attractive for investors or for consumers is the energy efficient aspect of products. So you guys need to pay very close attention to that. That's one of the reasons why the government is putting so much effort on green energy and things like that. For years, Ethereum proponents have pinned for the hypothetical as of now moment when Ethereum eclipses Bitcoin's market capitalization, the flipping. And like I said, this has been going on for years. Like, talking about this is nothing new. Even the merge is nothing new. The merge has been supposed to happen for about 6 years. You know what I'm saying? And it's finally going to happen. So just imagine 6 years of anticipation, and it's going to finally happen. What do you guys think that's going to do for the price of Ethereum? You know what I'm saying? So now here it says, what better time than Ethereum's merge? It's one of the most significant updates in the history of cryptocurrency yet, converting its energy-intensive proof-of-work-backed consensus with its own brand of proof-of-stake. The fusion of Ethereum's beacon chain and its long-running mainnet is expected to trigger in 6 days' time. Now, this article was written on the 8th. But whether it's enough for Ethereum to usurp Bitcoin is another story. Bullish sentiment would propose June as the bottom for both equities and crypto assets. Both have tanked about 70% from their respective November peaks. Okay. Bitcoin is hovering at around 19,000 and its market capitalization stands at just under 368 billion, representing 39% of the total digital asset market. Ethereum trades for 1,600 and its normal value is a touch over half of Bitcoin's at 196.4, a little over 1/5 of crypto's collective capitalization. So what I want you guys to pay attention to right here is I want you guys to pay attention to the raw numbers, okay? And what I want you guys to understand is that, say for instance, Bitcoin doesn't move. Now, if Bitcoin doesn't move and there's a massive influx into Ethereum after they see that the merge is running smoothly, all it'll take is for Ethereum to reach about 3,500, and at that point, when Ethereum reaches 3,500, it will be over Bitcoin. So all it has to do is double. Shout out to my man Alonzo. If you guys see that, give me a thumbs up. If you guys don't see that, give me a thumbs down. You can buy Terra Coin on the Coinbase wallet. Hold on, if you guys give me a second. Hold on real quick. Let me see. Hold on real quick. And you just have to link your Coinbase to this. Okay. Coinbase wallet is different from Coinbase. So I just put the link for the Coinbase wallet in the chat. I'm going to actually get the bots together once I get done with this stream and put a link for the Coinbase wallet in there so you can buy some, more coins. Because I think there's stuff that's on Coinbase wallet that's not on Coinbase that you can get. So now here it says back of the napkin math. Look at this. See, this is what I just said. So the flipping would occur if Ether reaches roughly 3,050. True only in the relatively unlikely event that Bitcoin's price holds steady. So they literally just use the exact same example that I used. You know what I'm saying? They literally just use the exact same example that I used. The only problem with that example is because it's an academic example, it's probably not very likely that Bitcoin's price would stay at what it is. That's probably not very likely. You know what I'm saying? So now here it says the flipping is only really a symbolic victory for ETH maximalists, but perhaps not overly significant for the industry as a whole. Bobby Ong, co-founder of data provider CoinGecko, told Blockworks. It's unlikely for Ethereum to rise past Bitcoin over the next 12 months, Ong said, as both Bitcoin and Ethereum have been moving in similar directions due to the macro environment dogged by inflation. And I agree with that. I don't think that this flipping is going to happen. If anything, this is going to happen in a 5 to 10 year span. Unless something crazy happens, I don't see it happening like in some crazy short time frame, like the next 3 months. Like that's insane. That's overly enthusiastic, and that's very overly optimistic in my opinion. So now here it says software iteration breeds bulls. Ethereum is eyeing another run at yearly highs against the price of Bitcoin, indicating markets are assigning values to the merge. All right, so pay attention to that. But Ethereum was much closer to flipping Bitcoin more than 5 years ago, the early innings of the last bull bear cycle. On June 12th of 2017, the market capitalization of ETH was almost 84% that of Bitcoin, with just 7.16 billion separating the two, according to TradingView data. That figure is currently around 52%, with more than 100% indicating a flipping. So if I was, what I would do if I was people is I would start paying attention to a Bitcoin to Ethereum ratio that you diversify your portfolio with so that you can take advantage of this. You know what I'm saying? In January of 2020, the bottom of the last bear market, the situation was far worse, with Ethereum at just 11% of Bitcoin's value, 15.4 billion to 146.7 billion. Still, the market values don't tell the full story. Comparing on-chain metrics, including transaction count, protocol fees, and the number of active addresses across networks, can also provide insight into their growth. Ethereum is ahead in terms of transaction count and protocol fees, CoinGecko's Ong said, and in a major dApp development, is also steadily catching up to Bitcoin in terms of daily active addresses. But the number of total Bitcoin users, active or not, vastly outpaced Ethers at the height of previous bull runs. Okay. So as you guys can see, like these are the charts right here, Bitcoin versus Ethereum. Ethereum is the purple and Bitcoin is the gold. They move almost exactly alike, except for there's just a smaller amount of Ethereum. So that's how you can kind of predict the price, the direction that things are going to go in for the entire cryptocurrency market by looking at what's going on with Bitcoin. But if Ethereum is at some point able to overtake, if Ethereum is at some point able to overtake Bitcoin, then the entire cryptocurrency market may no longer be dependent on the Bitcoin price. There may be some split between the influence of Bitcoin and the influence of Ethereum, with Ethereum picking up on more influence and affecting the altcoin market, because most of the altcoins are coins that that are tokens on Ethereum and NFTs and different things like that. So you guys want to pay attention to that. So now here it says Bitcoin users grew 37.5% between July and December of 2021, from 128 million to 176 million, according to a Crypto.com report published earlier this year. On the other hand, only 23 million users held Ether, a statistic which only grew by 1.4% over the same period. And like a lot of the old school people who have cryptocurrency, like a lot of old school people, they're like crazy. So like they'll just buy Bitcoin no matter what because they're insane, because they're team Bitcoin. And then like there's like these insane Ethereum fanatics that are the same way, and like in their head they have this crazy ass war between Ethereum and Bitcoin, and it's like, okay. But what you should be doing is you should be looking at this stuff analytically and utilizing the information that you have to make the optimal purchasing. You know what I mean? Which does not require just hashtagging BTC or hashtagging ETH all the time. What that means is do a technical analysis and make sure that what you're buying is value added. You know what I'm saying? So, like, see, this is funny as hell. They're talking about that right here, cult of personality. Like that's absolutely true. Especially older cryptocurrency investors, like not so much like newer investors, because newer investors are more logical. But like you're talking about like old school, like 1980s plastic frame glasses, Star Wars nerds that are like, dude, fucking team Bitcoin. You know what I'm saying? It's like, no, dude, fucking team Ethereum. It's like, no, how about like do actual technical analysis and buy the shit that has the most value? You're messing up the market price with that stupid shit. You know what I'm saying? So now here it says Ethereum switch to proof of stake could help boost the numbers. Not only is the merge expected to cut Ethereum's energy consumption by more than 99%, replacing its GPU miner-based issuance model to the one based on crypto collateralized validator nodes. It also lays the foundations to scale the network's base layer more effectively, proponents say. So now, in my opinion, it's not a bad idea to collect enough Ethereum to where you can be a node, because if you have enough Ethereum where you can be a node, then that means that you'll be able to get some really good staking rewards for helping secure the network. You'll be able to generate your own income. That's one of the goals that I have. Any of these proof of stake, any of these proof of work blockchains, I want to have enough tokens where I can be a node on multiple ones. I'm not really looking for price fluctuations. What I'm looking for is revenue generation. You know what I'm saying? So again, when it comes to buying these things, it has to be based on what your goals are and what your model is, as far as your financial model of how you want to generate most of your returns. You know what I'm saying? So now here it says Bitcoin and Ethereum differ significantly in primary use cases, diverging their value propositions. Bitcoin's application scope is narrow. It's censorship-resistant money propelled by peer-to-peer payments. But Bitcoin's architecture by design does not support smart contracts, unlike Ethereum and a raft of layer 1 competitors. This essentially restricts Bitcoin's usage to micropayments and tips. Remember the Lightning Network powered Polo feed. In addition, even with Lightning, Bitcoin is less applicable to the broader Web3 crypto ecosystem. That's important. And what's really important, in my opinion, right now is crucial to see if Bitcoin reacts to that or not, because that actually could wipe Bitcoin out. If Bitcoin does not adapt to the smart contract system, if Bitcoin does not adapt to Web3, if Bitcoin does not adapt to what Ethereum is doing right now, Bitcoin could become irrelevant. To me, this is a crucial moment to see how Bitcoin reacts. Almost more crucial than what's going on with Ethereum, because the implications of a Bitcoin failure could be monstrous to the whole entire cryptocurrency ecospace. You know what I'm saying? So now here it says the magnetize Bitcoin. Oh, this magnetizes Bitcoin to its store of value sales pitch. Users should rather hold Bitcoin than spend it in the same way as Ether and other Ethereum bound assets. So Bitcoin is trying to base itself and base its value on the fact that it is indeed a store of value. But if you guys listened earlier to that video, the problem with that is that the way that Ethereum's new merged blockchain works is that there will be an automatic store of value on the merged blockchain. So Bitcoin is not going to be able to just ride with that. And my thing is that this is a dangerous moment. You know what I'm saying? This is that kind of moment where if you've been a leader and you don't make the right decision, you can get surpassed by your competitors and ultimately either get absorbed or become irrelevant or have a crash in your value. Bitcoin, in my opinion, needs to do something. Like, this is the moment where they need to do something. So now here it says, some argue the Bitcoin development community prides itself on an unwillingness to iterate as quickly as Ethereum, bucking the move fast, break things tradition of the Silicon Valley lure. You know what I'm saying? See, the merge is still expected to happen around September 13th through 15th. What's happening today is the Bellatrix hard fork, which prepares the chain for the merge. Still important, though. Make sure you update your clients, okay? The early abdication of Satoshi Nakamoto's Bitcoin's pseudonymous founder contracts Ethereum co-founder Vitalik Buterin's persistent gravitas within Ethereum crowds, another potential boon to its value prop. Vitalik actually stepped away from doing a lot of work on Ethereum at the end of the ICO craze, but he still sets a roadmap and he still gets a lot of input. Katie Talati, director of research at Arca, told Blockworks. Added Talati, and obviously his opinion means not a lot. He's not necessarily dictating the day-to-day, but I think it does help having a bit of a guide. Another effect of Ethereum's proof-of-stake plan is that it will eventually turn the token into a deflationary asset, which industry participants say would likely generate significant interest. So pay very close to that. It would turn the token into a deflationary asset. That they say is going to generate significant interest. Anything that's going to generate significant interest is something that you want to pay very close attention to. Okay. Bitcoin supply limit is famously hard-coded with 21 million, while Ethereum's floats. The protocol modifies Ethereum's assurance rate and supply consistently with the network, currently burning transaction fees rather than paying them to validators. Sometimes more Ethereum is burned inside a block than issued, temporarily switching the cryptocurrency from inflationary to deflationary, a phenomenon expected to occur more frequently post-merge. And that's because it'll happen more. There'll be more transactions, and with more transactions, this will happen more often. So now down here, it says that the telltale signs of a flippening are unclear, which I would tend to agree with this. Now, is the potential there? Yeah, the potential is there. But are there actual concrete signs that this is indefinite and that this is ultimately going to happen? No, it's just a prediction. Bitcoin's issuance slowly decreases, halving every 4 years, but its supply will never formally decrease. This, at best, imbues anti-inflationary properties, although they are amplified once block rewards reduced to zero next century. Vivek Raman, head of proof of stake at BitUda, believes Bitcoin's faults give Ethereum an edge in creating sustainable monetary policy, complete with high network revenue to inspire longevity. See, it's almost like a mathematical inevitability, Raman said about the possibility of Ethereum flipping. See, and I said the same thing. Literally, like this is literally what I said. Estimating that it could happen possibly a year after the upgrade. Now, I think that this right here is a little bit optimistic. I think that's a little bit overly aggressive, a little bit overly optimistic, but you never know. You know what I'm saying? I've seen crazier happen. He argued Bitcoin enjoys its status due to an early mover advantage backed by the idea of a pristine digital asset, immaculately conceived by Nakamoto. And I agree with that. the Bitcoin thing is more of now, as of right now, it's more of a status thing. It's not so much based on actual value or actual competitive differentiation, in my opinion. So now here it says, while tampering issuance hasn't threatened its security model so far with enough miners on the network, despite lower rewards, they're still paid less over time. This means there's less and less incentive to mine every 4 years, Raman said. So what are the telltale signs of an impeding flipping? Now, this is what's important. People should be watching for this stuff, okay? People should definitely be watching for this stuff right here to happen. Surging open interest on Ethereum futures has been floated as one indicator. There's currently 12.8 billion in Bitcoin open interest compared to 8.6 billion for Ethereum per CoinGlass. But Raman suggested open interest is mostly a short-term signal, and in any case, rising level of open interest on Ethereum futures could simply reflect appetite for Ethereum's decentralized finance protocols. Ethereum has decentralized finance sitting on top of it, so an economy running on it, because there's more leverage, Raman said. If there's more leverage in the system, you're going to see a lot more open interest from futures and options. But that's just a function of more speculators and more participants with no clear indicators and a suffocating macro backdrop. Predicting the flipping is a tricky undertaking. It doesn't seem likely to occur around the merge or even within the next year, but it's clear the two networks and their native digital assets are posed to diverge in a big way. All right. So remember, when it comes to Ethereum, whether it overtakes Bitcoin with this flipping or not, whether that happens, there's an expected price surge when it comes to Ethereum. All right. So now I've been talking about Ethereum staking, and long time ago on my my original Blacklight Revelations channel, there's a section where it talks about Ethereum staking. If you guys haven't watched that playlist, the old Tales from the Cryptocurrency playlist, I would check it out if I was you guys. But here's another article. See, now Forbes is talking about it. What is staking? How does it work? So I'm gonna ask you guys that are watching right now, what is staking and how does it work? You guys, if you guys are able to, type it in the comments and let me know, what is staking and how does it work? This is what Forbes is saying. And you see, this is an article from September 12th, which is today. So the reason why they're doing this article here is because, again, we all know that that's how you generate revenue on the Ethereum blockchain, is by staking Ethereum to secure the protocol. Okay. So now here it says September marks the arrival of the merge, the long-awaited upgrade of Ethereum network to a proof of stake consensus mechanism. Ethereum currently runs on a proof of work model similar to Bitcoin, which uses vast amounts of electricity. It's also led to problems with scalability and high transaction fees. By adopting proof of stake, experts say the Ethereum merge will reduce the network's energy consumption by 99.95% and boost transaction speeds. So, I mean, like, this is insane. They're expecting the merge to actually damn near make the Ethereum blockchain perfectly efficient. At that point, it would seem like there's not even a reason to use any other Bitcoin or any other cryptocurrency. That's an important part. I want to make sure you guys got that right there. By adopting proof of stake, experts say the Ethereum merge will reduce the network's energy consumption by 99.95% and boost the transaction speeds. But what exactly is proof of stake? How can regular investors participate in Ethereum staking themselves? And I've been telling everybody, y'all need to do this. Do this. And just don't think about the money. Stake some Ethereum. You know what I'm saying? What is Ethereum staking? You probably heard of cryptocurrency miners who validate transaction on proof of work blockchains like Bitcoin. Crypto miners solve complicated mathematical puzzles with high-powered computers that use large amounts of electricity. Now, let's look at other economic factors. That's why it's important for people to watch Blacklight Revelations 4. And it's also important for people to watch Oil and Gold Railroad. What's going on with energy prices right now? That's the question. What's going on with energy prices right now? I'll tell you. For one, energy prices are out of control. They're skyrocketing. That's one thing that's going on with them. Another thing that's going on with them is that the weather is so out of control these days. Yeah, energy is up. Facts, AJ. The weather is so out of control nowadays that we're dealing with this, especially on the West Coast. You know what I'm saying? Especially on the West Coast, people are dealing with this. Power outages, not just power outages that are occurring because of the weather anomalies over on the West Coast, like the coming hurricane, but they're dealing with this because of things like the drying up of the Colorado River. So if you don't have electricity, how are you going to use your cryptocurrency equipment to mine? How's that going to work? So what that would also mean is that the network would be more dependable, right? See, look at this.
Is in Mesa, where the damage is extensive in several neighborhoods. Amelia.
Yeah, Iris, as you were saying, a lot
Carlton.
quieter this morning than it was even a few hours ago driving through here. We're not seeing any lightning anymore, a beautiful sunrise coming up. But with that sunrise, we're seeing just how bad some of the damage is in these neighborhoods. So we're just south of McKellips Road right now in Mesa, east of the Park of the Canals, if you're familiar with the area, in a small residential neighborhood there. You can see these tree limbs snapped down, branches all over the ground. But what I really want to point your attention to is the damage to some of these homes in the neighborhood. So this is what most of the chimneys in this neighborhood are supposed to look like, right? Well, this is what about a dozen of them look like this morning. Some of them are just toppled over on the roofs, but others are completely blown into the front yards of some of these homes. Yikes. This one you can see completely got ripped out of the roof here. Actually, the whole part of it, not just the top like we were seeing with a lot of it. So quite a lot of cleanup here that these folks are going to be waking up to. As we were driving through McKellips as well, we saw a lot of downed power lines, a lot of traffic lights that were out. So as people are getting up and driving around this morning, just be mindful, be careful. You're not quite sure what you're going to run into out on these streets, whether it's something from someone's house that blew in. I think we're seeing some awnings over here that are blown off as well. We saw a window that was kind of pushed in across the street. So there's a lot going on out here. Be very, very careful and mindful as you're driving through these streets, especially as you're going through the east parts of the valley like Mesa that got hit especially hard. So we'll keep an eye on things out here, Allison, but Mesa police warning people as well. Just be careful as they're driving through the streets and maybe try and stay inside this morning.
So that's just a snippet, and we'll be talking about that on Blacklight Revelations 4. But if you're dealing with problems like that because of weather changes, you're definitely going to want to try to generate your cryptocurrency assets through a system that is not so dependent on electricity. And if this Ethereum merger is reducing energy consumption by 99.95%, wouldn't it seem like this would be a more dependable way of cryptocurrency utilization? You don't have to worry about the issues with the environment as far as energy availability and energy utilization. Some leading cryptocurrencies that employ proof of work models, especially Bitcoin, have drawn widespread criticism for their rapidly growing energy consumption. And see, like now, you know, with the environment and what all the stuff that the government is pushing, if you have environmentally friendly, processes, you'll probably have some energy rewards as well as some tax rewards. So it's just more incentive aside from what you would be making with the cryptocurrency staking. You know what I mean? So you always want to pay attention to that, because honestly, it's those factors, in my opinion, those factors are what are going to make the merger more sustainable. The fact that it's moving in the same direction as everything else is moving in. It sounds good. It sounds nice with Bitcoin, but as that algorithm gets more increasingly difficult to have the amount of Bitcoin generated, which is going to ultimately be zero in 100 years, to do those complex mathematical equations, to do those complex block equations, is going to take far more energy, which means that the network is going to run way less efficiently. And who knows if the network will even be able to run with the energy availability that we might have, because the energy availability is going to decrease significantly. So just pay very close attention to that, because those external factors are a lot of times things that people don't think about. Like most times when people are talking about cryptocurrency, they're thinking within a box, as if the only thing going on right now is what's going on in the cryptocurrency world, and we don't need to pay attention to anything else. Well, unfortunately, that's not quite how that works. That's not quite true. Okay. That's not quite true. So just be aware of that. You know what I'm saying? So now here it says staking is the main alternative to proof of work. Once Ethereum adopts the proof of stake, there will be legions of volunteers validating transactions on the blockchain. Because think of that. In order to stake, all you have to do is have a certain amount of tokens in a wallet. And that's it. That's all you got to do. Hold them on the wallet that has the software that does the transaction validations. And that's it. You don't have to use energy, none of that. That's why it's reducing the energy down so low. Rather than employed high-power computers to solve mathematical puzzles, however, Ethereum staking involves locking up Ethereum on the blockchain and staking it as where to earn the opportunity to validate transactions and yield more Ethereum as a reward. You see that? So that's what's important. See, it says here, to become a validator, otherwise known as a staker, network participants need to lock up 32 Ethereum on the blockchain. That's a tidy sum worth more than $50,000 at today's Ethereum prices. So you need 32 Ethereum. That wouldn't have been hard back in the day. Back in the day, Ethereum was only $200. See, that's why it's good to have discussions and brainstorm, AB. You know what I'm saying? We get this stuff out here, you know what I'm saying? Pay attention to how the market goes and make your moves accordingly. You know what I'm saying? So now this in my opinion should be the goal, to have 32 Ethereums on the blockchain, which is about $50,000, which that's $50,000 right now. It could be more or less at some point in the near future. But regardless what the price is at in the near future, this will allow you to stake Ethereum and you'll be able to generate recurring assets, which is what I'm concerned about. So now here it says validators are then randomly assigned the responsibility of validating transactions, constructing new blocks, and maintaining the overall functionality of the blockchain. In return for locking up their Ethereum, stakers can earn a yield paid in Ethereum. See? That's how you get your extra Ethereum money. That's why, in my opinion, the goal should be 32 Ethereum. The yield will fall if a validator fails to validate a block once assigned a responsibility. Validators can also be penalized under slashing when the network confiscates some or all of the validator staked Ethereum for engaging in malicious activity, such as colluding to validate blocks incorrectly. Theoretically, These incentives encourage validators to behave appropriately to earn passive income and avoid slashing. In fact, Ethereum validators have been staking for a few months already. The Beacon chain, the upgraded proof of stake network that will be merging to become the main Ethereum network around September 15th, was originally launched on December 1st of 2020. Since then, investors have been able to participate in staking on the network. Their Ethereum One stake has been locked up until after the newly upgraded blockchain is up and running. And that's when they first started allowing you to stake Ethereum for E2. So now here it says Ethereum staking pools. Given current prices, 32 Ethereum is a very high threshold to get involved in Ethereum staking. Most ordinary investors are not in a position to lock up this amount of Ethereum to become validators. So in my opinion, that's one goal that people should have, is to get in that position. Get in that position where you have 32 Ethereum. That's where staking pools come in. They provide a way for individuals to collaborate to fulfill the minimum mark of 32 Ethereum required to become a validator. Corresponding rewards are then divided pro rata among pool participants. Ethereum lacks a native protocol that supports staking pools. Many big cryptocurrency exchanges, such as Kraken and Binance, and third parties offer Ethereum pooling features. So pay very close attention to that. For example, Binance US users can stake their Ethereum for 6% annual percentage yield. So on Binance, you can stake your Ethereum for 6%. Staking pools including those offered through crypto exchanges, allow more Ethereum holders to participate and earn passive income. The chart below shows that more than 13 million Ethereum is currently locked up in staking contracts, much of it through third-party mining pools. This is equivalent to 22 billion of Ethereum, nearly 11% of the total supply. So, I mean, like, in my opinion, like, this right here justifies Ethereum being a proof of stake. I know, right? No, I think Carlton is in here, and I think AJ is in here, and I think Carla is in here. You know what I'm saying? Yeah, but you know, people ain't really that big into wealth building. You know what I'm saying? They're not big into wealth building until they see how wealthy other people are. You know what I'm saying? So now here it says, it is important to note that the merge will not allow current validators to withdraw their staked Ethereum. So pay very close attention to this. The staking is a long-term thing. So if you need your money, don't dive into staking, or only dive into staking with what you can afford to leave on the network. You know what I'm saying? Because if you do that and you need to use the money, well, you know what I mean? It might not be available to you. It might not be available to you. So now here it says withdrawing will be possible once the Shanghai upgrade is completed at a later date. Lido, Endow, and Ethereum staking. All right. So now here it says current Ethereum validators have options to get liquidity before the next upgrade occurs. Lido DAO is a liquid staking solution. Here's how it works. In return for stakers locking up their tokens, they receive liquid tokens called ST-ETH or staked ETH. All right. This solution launched in December of 2020, a few weeks after Ethereum's Beacon chain enabled staking. It has since become the dominant market leader for Ethereum liquid staking, amassing over an 80% market share earlier this year. It is also decentralized, unlike a lot of liquid staking options. Using Lido, stakers receive the Ethereum staking rewards, yet can also use the ST Ethereum tokens they receive to earn extra yield or trade across the decentralized finance ecosystem. So you guys need to pay attention to this and make sure that wherever or however you're staking your cryptocurrencies, that you're getting the maximum amount of rewards, and that includes with these offshoot tokens. All right. There's a lot of money to be made in cryptocurrency. A lot. There's a lot of money to be lost too. So you just got to be careful. You know what I'm saying? Real quick, ladies and gentlemen, if everybody could take a moment and smash that like button, that would be awesome. Please make sure you guys smash that like button. And also, there should be a survey in the chat. I don't know if the survey closed out because I delayed the stream, but if the survey is still open about if you guys got a notification or not, please make sure that you do that survey. So now here it says, while the STETH Ethereum relationship should theoretically be 1-to-1, this hasn't always been the case. Amid the contagion crisis that eventually saw the centralized crypto lender Celsius file for bankruptcy in June, ST Ethereum was trading at a discount to Ethereum of up to 8%. This reflected the extreme fear in the market and the knowledge that Celsius was holding a lot of STETH on their balance sheet, desperate for liquidity when they had suspended customer withdrawals. How much can you make staking Ethereum? All right, so this is important. And I'm going to ask you guys that question. How much can you make staking Ethereum? That's the question. How much can you make? There is no fixed rate for how much Ethereum staking pays. Instead, it will vary depending on the number of participating validators at any given time. When fewer validators exist, the protocol increases rewards to incentivize more stakers to join. You see that? So pay close attention to that. When fewer validators exist, the protocol increases rewards to incentivize more stakers to join. Okay. Currently, stakers are earning roughly 4 to 7% annually, but some analysts predict that this could jump up to 8% or higher once the merge occurs before dropping back down. In terms of dollar gains, the percentage rate for yield earned will be contingent not only upon this gross rate, but also upon the Ethereum price, which has shown extreme volatility. Ethereum has shed more than 54% of its value this year alone. But now remember, it's supposed to increase again, probably beyond that 54%. Probably beyond that 54%. So pay very close attention to that. Is staking Ethereum a good idea? Let me ask you guys, what do you guys think? Do you guys think that staking Ethereum is a good idea? If you guys think that staking Ethereum is a good idea, give me a thumbs up. If you guys do not think that, give me a thumbs down. Okay. I think that it is. I think that staking all cryptocurrency is a good idea. But then again, I'm a cryptocurrency enthusiast, so I'm biased. If you anticipate holding Ethereum over the long term, staking could be worthwhile. The incremental yield earned will boost the total Ethereum you hold. There are situations where staking may not be suitable. For one, again, we talked about this, you sacrifice liquidity as Ethereum will be locked up for several months. So remember, make sure that if you are doing staking, you only stake what you can stake. Don't put all of your money into Ethereum and then be like, Rob, because of him, I got my house foreclosed on because I staked this Ethereum and I couldn't get none out when I need to pay my mortgage. No, Rob didn't tell you to do that. You know what I'm saying? While protocols such as the aforementioned Lido can help, there's no guarantee that market sentiments won't suddenly change and change the STETH rate off a 1-to-1 ratio. The stablecoin market meltdown in May of 2022 offers a cautionary tale. The most important consideration here is your time horizon and willingness to hang on to Ethereum. Ethereum, like other cryptocurrencies, is a volatile, high-risk investment that can quickly shift directions. Before investing in Ethereum or any cryptocurrency, you should do your due diligence and be prepared for the volatile nature of this kind of investment. See? Even Forbes says it. Forbes is saying the same thing that I'm saying. All right? So now, again, I like Ethereum. I've always been a team ETH person, but that doesn't mean that I'm not investing in Bitcoin either. And like I said, I'm a cryptocurrency enthusiast. You know what I'm saying? So I'm always going to say positive things about cryptocurrency, probably more so than somebody else would. But at the same time, I'm going to be open and honest with you and tell you about the risks, because there are risks. It's not just, a pot of gold at the end of the rainbow. So now this is an article here from News BTC. You see this right here? Ethereum price tries to breach $1,800 resistance and guns for $2,000. Ethereum will probably be at $2,000 by the end of the week. It'll probably make a couple jumps over and fall back, before it stays steady at 2K. And if you ask me, once it goes to 2K, once it stays at 2K, then more than likely what's going to happen after it stays at 2K is that's going to be the journey to 5K. Okay. If you guys agree with that, give me a thumbs up. If you guys disagree, give me a thumbs down. But that's what I see happening. All right. And we'll be doing some more Tales from the Cryptocurrency videos and checking out those prices. So we will definitely see if that holds true or not. Okay. So now here it says Ethereum rallied from the hype generated by the merge announcement. So like I've been telling you guys, this announcement of the merge has really been affecting Ethereum's price. And it's going to stay affecting Ethereum's price until the merge is finalized. And then what's going to end up happening is the performance of the merge is what's going to be affecting Ethereum's price. That's what's going to happen there. Okay. Although this is recent news, Ethereum already hit the $2,000 mark after the bearish July market. After over a month of price increases, Ethereum's price closed in on the $2,000 mark, one of its highest since the entire crypto market crashed. However, the most recent rally has placed confidence in investors and traders alike. So now that's a good sign when there's confidence in traders and investors. Now, here's my question for everybody. What does that mean for the price if investors and traders are confident? What up with it, Carla? We got Carla in the building. What does that mean for the price if investors and traders are confident? What does that mean? Tell me what that indicates. What kind of movement does that potentially indicate for the price? The highly anticipated merge. Okay. The rally was because of the recent Ethereum Merge announcements that has been the talk of crypto traders around the world. This move, according to Ethereum co-founder Vitalik Buterin, will bring efficiency to the network and reduce overall carbon footprint. These types of announcements, however, boost the confidence of traders and investors, pushing the price up. As of this writing, Ethereum is oscillating at ranges of $1,718 and $1,791. The token is also trying to entrench itself on the 78.6% in the Fibonacci retracement. Oh, look at that. In the Fibonacci retracement. The world is correct. So now here's the picture of the graph with the Fibonacci replacement. And as you can see, you see right here, see that where this red mark is? The red mark is right at 78.6%. And as you can see, it's at that Fibonacci line right there on 1,759, which is the price. All right. And you can see the pattern of the way that the candlesticks are going. We got Val in the building. Shout out to Val. What up with it, Val? So now here it says Ethereum bulls try to breach resistance. What that means is they're trying to break past that line. They're trying to break past 1,800 and get to 20. They want to break past this red line up top. But the support is set at 1,740 with the resistance at 1,802. So the resistance is right about, is right below, or it actually is right above this 800 line right here, which is at 61.8. 61.8% on the Fibonacci line. That's where they want to get to. But it looks like it's hovering right here at the 1,759 mark. As you guys can see, the candlesticks start to straighten out. They're parallel with that Fibonacci retracement line. So now here it says the recent support is set at 1,740 with the resistance at 1,802. The bulls have consistently tried to target 1,802 resistance to continue to rally. But as the graph shows, the rally has stagnated and bull now tries to consolidate the position. See right there? Stagnated. See how it's staying parallel with that line? That's that consolidation that they're talking about. Two things might happen while Ethereum's price stabilizes. The resistance will be pierced on a later date and will rally again, or the price breaks the 1,740 support and drops. If the price pierces 61.8% Fibonacci level, then the bulls will gain momentum and may reach 2,000 in a few days' time. But the indicators say otherwise. See? The indicators look like it's going to stay between 1,800 and 1,742 for a while. It doesn't show that. There's no evidence on this graph that it looks like it's going to break 2,000 anytime soon. But this graph also is not indicative of the changes that occurred with the merge and people's unpredictable behavior based on new information. So I think that it will breach the 2,000. It's just no evidence from the graph. But I think because of how people are purchasing and people's excitement behind the merge, I think that's going to change. You know what I'm saying? So now here it says the CCI and Stochastic RSI numbers indicate a slowdown in trend price. As of writing, the CCI is at 16.69 and the Stochastic RSI is at 16.17, indicating a small set of sell-off movement. If the bulls manage to gain momentum once again, then the price might jump and pierce to the next resistance level at 61.8 Fibonacci level. If the price goes down, however, we can expect support to be at the range of 1,662.31. All right, so now this is what I would be paying attention to. If the price gets in this level, this is when you want to start buying. When the price is in that level, that's when you want to start buying. This is a crucial point in Ethereum's history pre-merge. If the bulls fail to at least consolidate the price at the 1,740 support line, then there will be a large chance for a downward price reversal. This would inherently have an effect on Ethereum's price post-merge. All right. So again, I believe that Ethereum's price post-merge I think it's going to stay where it's at in the short term, but in the long term, it's going to be huge. Okay? It's going to be huge. Now, I want to show you guys two more articles. Okay? And we'll actually do some more tales from the cryptocurrency tomorrow. All right? So the first article that I want to show you guys is from Bloomberg. All right. And I got to get a subscription to Bloomberg. I thought I had one, but apparently I don't. So I'm just going to show you guys the headline real quick. Bitcoin is seen poised to escape from tightest range in 2 years. Okay. Now that could mean a lot. But what I think that this means is that what's going to happen is that there's going to be a skyrocketing starting towards the end of the year, going into next year, of astronomical increase in cryptocurrency prices. I think Bitcoin is going to skyrocket. I think Ethereum is going to skyrocket. I think Ethereum Classic is going to skyrocket. And I think Shiba Inu is going to skyrocket. And I don't think that that skyrocketing is a different skyrocketing from what's going on with the merge. The merge is just going to increase whatever already is happening. But there's going to be some serious movement. Okay. And I think, honestly, one of the reasons why this is really bad timing for Bitcoin, but one of the reasons why that skyrocketing, especially with Ethereum, is going to happen is because of this. The days of lucrative Bitcoin mining at home are over. Yeah, me too, Carlton. I hope I'm right too. So now, think about this. If the days of lucrative Bitcoin mining at home are over, and more than likely they're over because of increasing energy costs, if you're going to be able to stake Ethereum virtually with no energy usage, why would people not change their Bitcoin into Ethereum and just stake Ethereum? Basically, at the current prices, if you have 3 full Bitcoins, that's basically what's required to flip to Ethereum and store your Ethereum in a wallet and become a node. You can have 38 Bitcoins. So why would you not, or 38 Ethereum? So why would you not do that? You're not going to be spending any energy costs. You see what I'm saying? So, like, logically, if you're in this actually investing, you have to ask yourself, why would you not do that? You know what I mean? Does that make any sense? If that makes sense, give me a thumbs up. If it doesn't make any sense, give me a thumbs down. So now here it says the days of lucrative Bitcoin mining at home are over. Bitcoin mining equipment is costly and electricity does not come cheap. Plus, there are some big players on the scene. With the price of Bitcoin faltering and mining difficulty on the rise, crypto enthusiasts who once took home a pretty penny mining out of home garages are now finding it harder to break even. So now, if that's the case and people are finding it harder to break even, are people going to continue to do this? That's the question. Or do you think they're going to flip their money into doing it where there's less cost? If the cost of mining Bitcoin is increasing to where it's not profitable, why would people continue to do non-profitable activities when they can flip 3 Bitcoins into an Ethereum network node and stake on an Ethereum network node, not only get the staking rewards, but also get the reward of no energy cost? Think about that. So now here it says mining Bitcoin at home today is much more challenging than in the earlier days of crypto. Mining equipment is costly and electricity does not come cheap either. And the number of people willing to risk investing in Bitcoin mining operation has shrunk. So now, see, the electricity not coming cheap, in my opinion, that increased the risk, because the risk is if you're not having any profit. Facts. Make sure you guys listen to Alonzo. Make sure you guys smash that like button. And definitely check out the replays and check out all the replays on this channel and check out all the Tales from the Cryptocurrency replays. You know what I'm saying? You guys will see how accurate things are. So now here it says, in terms of demand, it declined in June very significantly. Lauren Lin, operations manager at mining pool Luxor, said. However, at the beginning of August, the demand has been picking up, partly because the Bitcoin price went up little from June's decline, and also more hosting sites have come online. Hosting sites are data centers where miners can store and operate their equipment for a fee. The infrastructure that comes with Bitcoin mining, at least to be profitable, is substantial, Lynn said. So, I mean, you don't think about this. What is the equipment cost of staking Ethereum? That's my question to everybody. I need everybody to answer that question for me who's watching right now. What is the equipment cost for staking Ethereum? Is there one? How much is the equipment cost? The only equipment cost for staking Ethereum is the Ethereum itself, right? You just have to have, what is that, 35 Ethereum tokens? But if you don't have 35 Ethereum tokens, you can go into a pool, but there's no energy cost, no equipment cost, right? So logically, why would someone not do that? In my opinion, that particular element of flipping is also going to change the dynamic of how many people are dealing with Ethereum versus how many people are dealing with Bitcoin, right? Why would it not? So now here it says to mine at home, it not only requires the capital to purchase the ASIC, application-specific integrated circuit rig, you need to know how to ventilate. You need to know how to deal with that noise and the heat. There's a lot to consider, Lynn said. Profitability is first and foremost the top concern for most miners, Lynn added, and recently it's been harder to turn a profit. Now, here's my question. Why would it be harder to turn a profit? Think about that. Think about that. This could actually be the ultimate flaw. This could be the ultimate flaw and what could eventually bring Bitcoin down if Bitcoin does not change something. The less Bitcoin there are to be mined, the harder the algorithm is to solve. The harder the algorithm is to solve, the more energy is required. The more energy that's required, the higher the price to mine them is going to be. So as you're making less money by Bitcoin that's generated when you mine, you're paying more money in energy costs to mine less Bitcoin. So as the network difficulty increases, your revenue generation decreases, because as the network difficulty increases, you're going to be using more energy to solve the equation while generating less Bitcoin. So where's the incentive to mine it at when you could just drop your Ethereum tokens into an Ethereum node and walk away? Like, it literally makes no sense. And that's another reason why I'm saying that ultimately, when people start waking up and there's more people who just aren't biased cryptocurrency nerds who are invested in team cryptocurrency sports, when there's logical people and people that are using data that's available to them who are going to be making these decisions, Ethereum is ultimately going to overtake Bitcoin unless they make some kind of significant change. Yeah, I gotta agree. I agree with Val. If you guys agree with Val, give me a thumbs up. It would make more sense to work with Ethereum. Absolutely. More first-time miners have been purchasing S9 mining units, an older model that does not produce enough Bitcoin to offset the electricity costs. You have to at least offset the electricity costs. I mean, if you're not offsetting the electricity costs, what's the point? That is something to seriously consider. And in my opinion, that is going to be a long-term erosion from Bitcoin's market capitalization. I will say, at least for our customer base, the people doing this have the main purpose to test how mining works, Lynn said. If you are mining at home with residential power rates, and S9 is not profitable at all, but you would get some experience. Now, here's my question, right? Okay, it's cool to have some experience, but what good is the experience if the process is outdated? And if you ask me, mining is moving towards the realms of being outdated. It's moving toward the realms of being outdated. Corporations keen to cash in on the crypto demand have been on the rise as well, further pushing out garage-based operations. The big boys are playing hard and employing multiple strategies to make a profit from their sites. Sam Doctor and David Bellman, mining researcher at analytics firm BitOda, wrote in a recent note. The big boys, i.e. the major corporations that have entered the mining space in recent years, are diversifying their revenue streams to weather out rocky market conditions. So I'm telling you guys, this Bitcoin mining issue could be a huge roadblock in the future for Bitcoin. And it could be a huge area of vulnerability for Ethereum to whiz right past Bitcoin. If they don't do something about this now, this is going to be extremely problematic for Bitcoin, in my opinion. This is one of those things that happens when, you know, they're sitting comfortably and not really paying attention or, you know, aware of things that could happen as a result of being in the position that they are, getting too comfortable. You never want to get too comfortable. You know what I'm saying? Yeah, I got to agree with AB Promotions becoming obsolete. You know what I'm saying? NASDAQ listed stronghold Digital Mining has been selling power to the grid and its mining machine to cover debt. Other companies have shifted gears entirely. Bitcoin miners in Rochester, New York have bought a retired power plant block back into operation to generate new cryptocurrency. You see that? Private equity firm Alas Holdings purchased Greenwich Generation in 2014 and converted the coal-fired power plant to natural gas. In 2021, the company started using the generated power to mine Bitcoin. There is now legislation in New York aiming to prevent new operations from drawing on fossil fuel. See what I'm saying? The government is cracking down on energy. The government is cracking down on energy. This is why I keep telling people, make sure that you guys check out those videos on Blacklight Revelations 4, because the government is cracking down on energy. And you're either not going to be able to use fossil fuels. Remember, in California, they're trying to make using gasoline-powered cars illegal by 2023. There has also been a shift in geography, Lynn added, especially in the wake of China's ban on mining operations. Mining activity has picked up across Europe and South America, Lynn said. Starting from the end of last year, we're seeing more and more South American miners scaling up, Lynn said. Around the time of the China mining ban, they still purchased very old generations of ASICs. Now they are moving into the latest generations of ASICs. So, you know, I don't know. I don't think that there is a lot. I don't think that there's a lot of incentive for Bitcoin mining as a long-term investment currently. You know what I'm saying? I don't think that. I think that Bitcoin mining is on its way to extinction. It's definitely slowing down. And I think what people need to do now is to look at the most value added, energy efficient ways to generate cryptocurrency with the existing cryptocurrency that they have. And in my opinion, if you look past Ethereum staking to do that, you're really doing yourself a disservice. So with that being said, ladies and gentlemen, that ends the live stream. All right, we will be doing more of these. I hope you guys enjoyed it. If you're not subscribed to the channel, make sure you hit the bell icon twice. Also, make sure that you smash the like button. Please make sure that you share this video out, and I will catch you all on the next video. All right, peace.